What's up, everybody? My name is Joe Brown. This is Heresy Financial. Pretty much every month I give you an update on the housing market, on real estate. And every month I give you real numbers of what is actually happening that month. And without fail, every time there are some people who come out of the woodworks to say, hey, just wait till next month. I promise the crash is coming next month. Well, another month, another promise broken, and we are at October now. And just to be clear, when I say prices of real estate, the housing market exploding, I mean explode up, not down. Because the October housing data confirms yet again what I've been saying for like 2 years now. So let's take a look. Ready? Let's dive in. All right, we are going to look at 6 key pieces of data here for the month of October. First one, home sale numbers. Home sales reached their highest level in 9 months in October. That's right, more houses changed hands in October than any time in the last 9 months. No eviction moratorium crisis, no foreclosure crisis, no forbearance ending crisis, no explosion in supply, just more people still buying homes. Number 2, prices. What have prices done? Well, prices went up again in October, and compared to October of last year, they were up 13.1%. That puts the average home price now at $353,900. Now, you might be thinking with another rise in prices that the pace at which houses are being sold might have slowed down, but you'd be wrong. The speed is actually increasing. On average, in October, homes were listed for sale for only 18 days before getting sold. Now, that is longer than September, which was 17 days, but it is much faster than October of 2020 at 21 days. In fact, over 80% of homes that were listed for sale in October were only on the market for 1 month or less. So why so fast? Well, that brings us to the third piece of data, which is supply. Very tight supply still. How tight? Well, we've got about 2.4 months worth of inventory before running out at the October pace. That 2.4 months, what that means is if no new homes come on the market at the current pace of buying that we had in October, it would be 2.4 months before inventory completely ran out. And that is actually less than it was last October of 2020, which was 2.5 months. So despite 2020 seemingly a lot of people thinking that was going to be an outlier in terms of a lot of these housing statistics, looks like 2021 is continuing or even worsening in terms of a lot of these key statistics in making the housing bubble, housing market crisis, red hot housing market, whatever you want to call it, just persist. To put that into perspective, the normal supply is about 6 to 7 months. So why is supply still so tight? Well, this brings us to number 5, which is supply chains. That's right, new builds, new homes being built were down again in October simply because home builders cannot source the material, the labor, they cannot get the supplies they need in order to build the houses. So, new houses, they're being delayed. They're not getting built. There's the largest, I believe it's the largest backlog ever recorded, or at least in recent history, of new houses just waiting to be completed. And now for the kicker. Number 6, who is buying these houses? Because this is the real problem that I've been talking about all along. First-time home buyers in October were 29% of the buyers. Now, you might look at that and think, hey, that's great, 29% new home buyers, except that that's down from last year, which was 32%. So on average, we are trending down in the first-time home buyer category. That means fewer people are moving from being renters to homeowners. However, contrast that with investors. And this is small investors. Small investors made up 17% of home sales during October, which was up from September, which was 13%, and up from a year ago in October at 14%. So new home buyers are being sidelined. They are being pushed out of the market. They're being priced out of the market. Meanwhile, investors, people who already own homes, who are buying more homes to rent out as investment properties, they are soaking up more and more of the supply. And as supply tightens, rents go up as well because everybody still needs somewhere to live. And finally, Powell was recently renominated for a second term by Biden. It looks like the Senate will push him through, which means he's going on to his second term, and they're on track to continue the taper. That means that interest rates for mortgages are going to continue to go up because the Federal Reserve is currently buying mortgage-backed securities. As they back out of that market, and purchase less and less every month, mortgage rates will rise, especially given the fact that they're lowering their purchases of treasuries as well, which will push up interest rates along the yield curve, which will also have an effect on mortgage rates going up. So I expect this to be a pause for the housing market. But given the extremely tight supply, and given the fact that this tight supply looks like it's not going to be solved by new home builds simply because of the persistent supply chain shortages that look like they're years away from being figured out, I don't see any way this could devolve into a housing market crash. I only expect the price rise on average to slow down. But when it hits the fan, and this taper, if you've seen my other videos, you know that I expect this taper to roll over into some other crisis, whether it's emerging markets or whether it's some financial institution suddenly declaring, hey, we're insolvent, we need a bailout, whatever it is, there's going to be a trigger, there's going to be some sort of little crisis that's going to cause the Federal Reserve to have to step back in, reverse course, start buying up a ton of bonds again, slam interest rates back down to zero. And if you think the housing market went crazy as a result of mortgages reaching under 3%, everybody being able to refinance their mortgages for cheap, everybody being able to afford higher and higher housing prices because the cost of servicing the debt has gotten so low, that will only accelerate when mortgages get pushed down to 1% or lower, even closer to zero, because the Federal Reserve will pull out all the stops to rescue the economy, to stop the crash, to give Americans a break as they attempt to stimulate debt growth one last time. And finally, if you are looking for an easy way to get started investing in real estate, check out Fundrise. You can invest in institutional grade real estate portfolios with automated investments, low investment minimums, and a very easy to use app. If you want to check them out, I've got an affiliate link in the description below. As always, really appreciate you guys. Thank you so much for watching. Have a great day.